Oh, y'all can't hear me. Kevin was saying no voice. No El Voicio. I was muted. He'll learn and share. He'll learn and share, and Kim just gonna sit there and let me talk with being muted the whole day. Golly. God, look how they do me. Look how they do me. Oh, I missed that. You supposed to say it louder. Slackers. You supposed to say it louder. You supposed to be like, Tim, you muted. You supposed to pull up in the Discord and say, Tim, you muted. All right. Bat signal has been sent out. All right, now, let's get to it, man. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If this is not your first time tuning in to Tim's Tidbits, y'all know I still want to say welcome. But I really want to give you a nice, hearty, well, thank you for always pulling up the tunes, Tim's Tidbits. If you don't know my name is Timothy Lee Rogers Sr., a.k.a. Haranya Gundy. That's Big Spot if you don't hablo español. Hey, you are in tune to another episode of the Intraday Price Action Recap. Let me see who up in here, man. I see we got Here to Learn and Share up in here. I see we got Kim up in here. I see we got Thomas up in here. I see we got Double O Kevin up in here. I see we got Kashaya up in here. I see we got Deborah up in here. I see we got Jim in the Discordia. Shout out to Russells, man. The hardest lieutenant on the tank. I ain't seen the Russells in forever. The Russells up in here. Hardest lieutenant on the tank, the Russells. The Russells spread their wings and flew away from the gang and never looked back. Said, forget y'all punks. I'm out of here. Hey, man, let's get to it. How was y'all day today? Hey, before we get to it, real quick. Earlier today, I talked about how we today, what's up, Audrey? I ain't seen Audrey in longer than I ain't seen the Russells. I talked about earlier today how when me and the boot camp people, what's up, shop girl BK? Me and the boot camp people, we was on live doing the tape reading stream, the daily tape reading that we do. And this is 9:30 here. I'm going to put a line there so you can see 9:30. All right. Darken it up a little bit.
Can you share your screen on the Discord?
Oh, my bad, Jim. My bad. There wasn't nobody in there at first, so I ain't have it shared. My bad, Jim. Share the screen. Jim said, man, share your screen. Stop playing with me, man. Shout out Yolanda up in the Discord, too. How y'all doing over there in Discord land? Right, so that line right there represents the 9:30 open, right? So we were on the live till about 10:45 or so, right? Right up in there. So this is the time we was on the live together there. Let's highlight that and then get them lines out of the way so we can see what a goings on. All right. So now, that little highlighted area right there is the area and price where we were just trading and doodling around in, right? And so, as price was doing around, let's go back here. Let's do it like this, right? As price was doing around, wasn't doing much of nothing. Okay, so the question was asked, like, so Tim, you're not looking to try to trade this until we break out of this area. I say, yes, I'm not looking to try to trade it until we break out of this area, right? I said, since we're so far into a discount, because this is the entire overnight range here, right, from the highest high to the lowest low, I was like, I'm not interested in taking anything to the short side. If we break out to the short side, it's going to go without me because the sell side was there and the sell side was here, right around consequent encroachment of that daily wick that we were looking for price maybe to trade down into and maybe use as an anticipatory reactionary point, right? There's a daily fair value gap down here somewhere too, right? It's just stuff that we were looking at. Hey, if price got down there, we want to see that as an ARP. Okay, so I was like, if we break out to the downside, we're so far gone, I don't want to participate to the downside to my ARP, right? And I said, if it breaks out to the upside, right, I need to see a breakout, a respect of this, and then some kind of setup to get long going back up to the midnight open, right? I said, that's what I would be looking for, right? Going back up to the midnight opening price. And then, of course, you got buy side liquidity resting right there above the midnight opening price. That's what I said. I was like, and I made sure I explained it thoroughly. Me, little Timmy Rogers, right? If it breaks out to the upside, I'm not going to try to buy immediately here because I think somebody asked about the 2022 model, right? Taking liquidity, trading back down into a fair value gap to go. I'm not trusting it right off of this because we were in high resistance conditions. We had already established that it was divergence, so we was anticipating high resistance. What's indicative of high resistance? A bunch of overlapping candles and deep retracements, very deep retracements. Okay, so me, if I'm shooting for this, right, I don't want to try to trade right off of that immediately. Why is that? Because we're in a deep discount and price has been bearish on the day. And if we pushed up out of that consolidation there, that's just going to put us up into a premium, right? That's just putting us up into a premium of the overnight range, right? And that's a place to be trying to sell if price wants to continue down, right? So since it's so far down here and we having divergence and the YM is to the moon, the ES is trying to get to the moon because the YM is up there. That's the YM, right? That's the ES, right? I was like, the NQ can possibly want to catch up, right? So in order for me to play something to the upside, I needed to break out, respect the breakout, and then give me a setup here to go long, right? Now, full disclosure, full transparency, it did what I wanted it to do, but it didn't give me a trading opportunity to get back to midnight, and I'll explain why. Boom, there we go. Did exactly what I said I would want to see it do. We broke out, we came back, respect the breakout, and then gave an opportunity to get long, right? Breakout, respect the breakout, fair value gap, take the liquidity, retrace back down to the order block, right? Remember we said high resistance, deep retracements. See how far we retrace back? We came all the way back to the order block on this move right here. In a low resistance liquidity run, you will want to see it coming back to that fair value gap and leaving that breakaway gap alone and continue to go. But with this high resistance, we came all the way back down to the bullish order block and went up. So whoever that was on the boot camp that asked that question earlier, here it is, played out exactly like I said I would want to see it. Like when I drew it out, I said break out, respect this, and then give an opportunity. Break out, respect this, opportunity. Boom. Right? There it is right there. Right? We talked about it when we were here. Right? Talked about what we want to see when it was there. Right? Drew it out, come here, opportunity. Right? And then there it is. It's come to fruition, right? Well, Tim, why didn't you trade it? Because I have certain times where I'm looking to trade and then I get off. I don't sit here all day trying to trade. I got certain times where I'm looking for a trade setup, then I get off. Every now and then, I'll come back and look at the afternoon to see if I can get something. Today, if I would have came back to the afternoon, I would have been able to get a trade. But I didn't come back in the afternoon today. Right? But there it is right there. We talked about it beforehand, and then it played out exactly as stated. Am I saying I got a crystal ball? No. But price gives certain signatures, and when you know the signatures you want to see, they repeat. The signatures repeat over and over and over. And today just happened to give the exact signature that I was looking for this scenario to play out to the upside. Now, before we get, anybody got anything for me before we get into the price action recap? Anybody got anything for me before we get into the price action recap? What's up, cuz? What's going on, What's going on, Yolanda? See y'all pulled up. All right. Ain't nobody got nothing for me. Let's go ahead and get into the price action recap. Price action recap. Okay. Let's go up in time for a minute. All right. We're going to go up in time for a minute. We're going to knock today's trading off while we go up in time, right? These are daily candles, and we're going to talk about what we marked out, right, as far as PD arrays. Kept it real basic, right? We kept it really basic because we had already come up to our target, which was here, right there. We'd already come to our target, which was there, and that was the next place of liquidity up there, right? So we hadn't marked that out yet. We traded close to that, created a relative equal high with yesterday's candle, right? So we got relative equal highs up there. We understand that's what's up there, but we already got our daily high mark there. So there ain't no need to put a million things on the chart. This right here was the new day opening gap, right? This is when today's trading opened up right there. That gray box right there shows the new day opening gap, right? This here is a old new week opening gap from December the 9th, right? Reason why I got that marked out, because if yesterday price had started to retrace, right? We talked about price had come up, set a relative equal high, and then it has started to retrace. So since price has started to retrace, we're looking for PD arrays that the algorithm can react off of, right? Now, you say, Tim, if you got a new week opening gap there, you always be talking about don't go below your higher time frame stuff to mark out lower time frame PD arrays. I'm glad you asked that question, little Timmy Rogers. When was this new week opening gap created? Can somebody in the chat tell me when this new week opening gap was created and why I went below it to mark out daily PD arrays? All right. Somebody take their best guess. If you're in the Discord, you can unmute. If you're in the YouTube, just put it in the chat. Right. See the date it was created. Tell me why I chose to go below a higher time frame PD array to mark out lower time frame PD arrays. Right. When we was doing the chart prep, I was like, hey, don't go below your higher time frame, wasting time putting stuff on the chart for a lower time frame. All right. Somebody take a guess at that. Somebody take a guess at that. Somebody take a guess at that. Yep, that's when it was created on December the 9th.
Because it was created back on December the 9th. So we are now in January, and we want to look at that lower time frame in reference to the current time.
The current, look at it. That's what I wanted right there. Y'all better get, what did I hit? What did I hit? I hit the wrong thing. Get out of my way. What am I hitting? Okay, y'all better give it up for Yolanda, man. Y'all better give it up for Yolanda, man. Shout out Yolanda. Yolanda done pulled up. Shauna still done pulled up with the hard-hitting answers, man. It's not a part of current price action. This new week opening gap is not a part of current price action, right? This was made all the way back over here, right? And we've had days and days and days and days and days and days and days of price action since this was created, right? Now, PD arrays never go stale. So you want to put it on the chart to see how price reacts when it gets here, right? Since it's not a part of current price action, right? When you're marking price, right? It's only during current price action when you don't want to bother going outside of the higher time frame, marking lower time frame stuff. Like I got a daily range right here. I'm not going to go outside of my daily range, marking out 4-hour fair value gaps and 1-hour fair value gaps down here or up here, right? Because my higher time frame takes precedence. The only time I'm going to start looking at these down here is if we start to push through the higher time frame PD arrays. Then I would start to annotate those to see how far price can go, right? So current price action is it's not current price action. The reason why I got daily PD arrays marked out below this weekly PD array. And speaking of, we got consequent encroachment of this premium wick because we got a balanced price range right here. We got a reclaimed fair value gap, an inversion fair value gap, all in that spot there. So that's a balanced price range there. And instead of highlighting this whole balanced price range and having it overlapping with this, I just chose to highlight the consequent encroachment of this premium wick to see how price reacts once it start coming down. Because as price comes down, remember, old highs and old lows are also PD arrays. And if we trade down to an old high, right? If we trade down to an old high, right, that's now a discount PD array because we're above price, right? And if we trade down to an old high, right, we want to take into account, right, consequent encroachment of that wick, right? Because wicks are gaps. So we want to take into account consequent encroachment of that wick, right? You really want to take into account the whole wick. Any PD array, you can put it into the 4th grade, run it in quads like this right here, and treat it the same way. You want to see, you know what I'm saying, a respect of the 25% to a half to show that they're showing respect of that PD array. Meaning if we come down into it, right, ideally, you would want to see it hit the 25% and go, right? You want to demand 50%, then go. If it start getting way down here to 75% and the full thing is showing high resistance and weakness and a possibility to fail, right? So that's why you want to demand that 25%, that 50% at the most on a closing basis. You definitely don't want to see it closing below the 50%, right? On that time frame, okay? And then there's a daily there's a daily fair value gap here that I don't have marked out. Why? Because we already got the yesterday's new day opening gap there, and then this daily fair value gap extends beyond the low. So instead of overlapping all of that, just left the new day opening gap there, right? And we keep it in mind there is other PD arrays in confluence at this area here. Balanced price range, fair value gap, new day opening gap, right? All of that confluence, okay? Now that we got all of our higher time frame stuff that we marked out, right? That's the only thing we marked out on the higher time frame, right? There was nothing worth marking out on the 4 hour, right? Nothing worth marking out on the 4 hour because we already got daily PD arrays all up and through this area right here. So there's nothing on the 4 hour worth marking because we got daily stuff that's there. Okay. And then, like I said, with current price, we're not going below the daily stuff to mark out 4 hour stuff. Right. And then ain't no need for me marking out this 4 hour fair value gap when I got daily stuff down here. So I'm anticipating price to push through that 4 hour fair value gap to come to the daily stuff. All right. So now you're living in the mind of Lil Timmy Rogers and how I mark out my charts and why. All right, let's put the meat back on the bone and let's go to price. All right, so drop down to a 15-minute chart. All right, and looky who stole the freaking cookie. Gang, gang. Gang, gang. Gang to the gang. Now, y'all know we did not put this wick into the 4th grade today, right? Y'all know we did not put this wick in the 4th grade today. This morning, all day long, right? Our chart looked like this, right? Right or wrong? Jim, you was there. Who was Yolanda? You was there, right? Yes or no? But our chart looked like this as far as the consequent encroachment of that wick, right?
Yeah, that's right.
Yes, that's right. But now,
Yeah, that's what it
when
looked
we
like.
go back and remember I say you can grade any PD array, and we put it in the 4th grade, right? Where are we? It's upside down, right? Our what's the name is upside down. So let's reverse it. Reverse. Okay. Where was price hanging out at? What area is this right here? What's that blue line there? Right.
That's equilibrium.
No, equilibrium is the red line.
Oh, okay. I guess that's a discount.
Let me make the font big in case y'all can't see it.
Yeah,
there you go. What's that top line right there?
That's 25% right there.
25%. And what did I say when you come in to a PD array? You want to see it respect 25% and get on up out of there. Did I not just say that? Oh my God, golly gee, Williger's beef. This stuff really works. Right there. Without even putting it in the 4th grade. We didn't grade this early. We just had it at consequent encroachment and we were just hanging out right there. And we was like, hey, we're just consolidating, man. We got to wait for price to do something. We're just consolidating. All right. And then who in the gang remember what I said this was right here? This area right there. What did I call this area here today? All right. I called that something I hadn't said in a long time.
You probably said chop swap.
Nuh-uh. You probably was asleep during the class. That's where you probably was. But I called this something that because I said I'm just looking at this side of the curve and that side of the curve. I called this something that I hadn't said in a long time. Time distortion. Shout out Wells J Rock said time distortion. Shout out Wells J Rock, time distortion. Time distortion. Looking at it as time distortion. Okay. And here it is playing out like we said, right? Because if you look at this as time distortion, somebody charging you $19.95 for this. Watch this right here, right? We have a bullish order block right here. If we stretch that bullish order block out in time, right? Stretch it out in time. Bullish order block. I'll just pick anything. That's good right there. Bullish order block right there. Okay. Let's get us another little box. And we're going to highlight this area that we said we're looking at as time distortion. And this was before we even displaced away. Right? This is before we displaced away. All right. We'll come here. Okay, we'll do like that. And what we're going to do, we are going to make this white Put it on 100%. Okay. And then put this in front of that. Like so. Right? What do you see price doing? Right? When you take out the time distortion, what do you see price doing? All right, let's draw this out. We got a line here, boop. Then we go up, boop. We come back down, boop. Right? Y'all see that? When you take out that time distortion and you just look at this side and that side, we came down, right? We went back up above that high right there. We traded back down into the bullish order block right there. Y'all see that there? Can you see it? Can you see it? Did you get it yet? Get it yet? Get it yet? Ooh, my secret. It's somebody on Al Gore's internet charging $19.95 for this stuff right now, man. $19.95. Right? $19.95. And remember non-gang members. Remember, price looked like this. Right? Price looked like, matter of fact, we hadn't even broke up there yet. We hadn't even, because this is the 1030 candle. And it's like we were wrapped up. We were done then because I was like, hey, it's 1020 something. I'm sorry for holding y'all long. We need to get off. This is what price really looked like right here. Right? Remember, we didn't have the 25% there. That's just, that's just something that happened to play out in real time when I made a statement, and now we see, look how the candle came right. Look at the bodies of the candle respecting that 25%. Oh, look how when the candle dropped back down, it just barely poked below that 25%. Dropped right below that body right there. Oh, look how that candle zoomed down and stopped right above 25%, not taking out that low right there. Come on, man. It's somebody charging you $19.95 for this right here. Right? Why? Can somebody tell me why the algorithm didn't take out this low? We just talked about this yesterday. We just talked about the exact same signature yesterday. Why didn't the algorithm take out that low right there? And it has something to do with that low right there. Right? Ramon, not 25%. We just talked about it yesterday.
Was that the reversal? Smart money reversal or something?
Which one was the smart money reversal?
The one on your left.
This one here.
Yeah.
Yes. This is the protected stop, right? That's why this low right here, when it dropped below this consolidation and took out this sell side right here, because the algorithm is letting stops accumulate here and there, right? So when this candle here at 9:30, right? Remember, we talked about this earlier. Boot camp, y'all remember. We said the 8:30 took out the buy side. The 9:30 took out the sell side, right? And it was like for the bullish argument, the 8:30 and 9:30, that would be the wig snatcher, because we would see go in the right direction, go in the wrong direction, then come back and give you an opportunity to participate. Right? We said for bullish, that would be the wig snatcher. Okay. Since this low was protected, right? When we dropped below to take out the sell side after the news candle took out the buy side, price did not mess with that low. That low is protected. It punished anybody that keeps their stops based off of line charts. Right? Because remember we said line charts are defaulted to be at the close. So if you got your stop below this pivot point right here, right? If your stop is below that pivot point right there, that is the close of that, I think it's the 4 o'clock candle. right? Even though there's another candle body that's a little bit lower, if your stop is below that pivot point, right there, that 4 o'clock candle right there, you just got punished. Your liquidity just got raided and it wicked back up off of there, right? But since it came down to take out liquidity before going up eventually, it did not mess with that protected stop right there, right? Now, once we took the liquidity, the damage is done. So when we come over here at 10 o'clock, right? What's the algorithm's job? To attack liquidity or imbalance, right? So what does it do? The algorithm drops down below all of these relative equal bodies right here. All of these relative equal bodies, right? So if I draw a little, just come across like that right there, I'm gonna go up until, right? And we know that this wick came all the way down to here, right? And we'll put it back on a line chart for you. Oh, we cooking tonight. It came below all of this sell side liquidity right there. The wicks do the damage. The wick came all the way down to here, right? All the way down to there. But it did not mess with that low that's protected right there, because this low was to do the damage of taking out the liquidity and not interact with that protected low. And then this wick came down here to damage people again and not mess with that low. We just talked about this exact signature yesterday, right? We just talked about this exact signature yesterday. Okay. And again, this morning, like I said, I'm not interested in participating to the downside because we are in too much of a discount. I would rather participate to the upside, right? Or I will participate to the downside if I got something of you know what I'm saying, a good reason for selling here. But since everything is bullish, right? I was looking to buy off something down here, right? I'm not really particularly interested in trying to trade against the grain. So I want to see this, right? And enter over here somewhere, right? And as we know, when we put the meat back on, oh my goodness, that boy drew it out perfectly. Oh my goodness, the calibrated eye is going crazy tonight, right? That's exactly what happened. And again, full disclosure for the haters, I did not trade this. It didn't set up during my time when I'm looking. But if you take the time to learn these concepts, you too can prevent forest fires. You too. All right, man. Where was I? Okay, so price, it sold off most of the night. From the open all the way down here to about 420. It sold off, making the low in London, right? London gave us our low of day, right? That gave us our low of day. We made a low in the London. Went into a huge consolidation all the way up until about 10:30 in the morning. So it just consolidated all the way up until about 10:30 this morning. Like I said, I was looking at this as time distortion because price wasn't doing anything. It was just accumulating orders, right? So the algorithm displaced away to the upside, right? And in this case right here, on the 15-minute time frame, I'm just looking at this as a curve, consolidation, expansion, right? A retracement, a delivery, right? That's what I'm looking at it as, because this little double pump right there, I'm just looking at that as one move, right? I'm looking at that as one move there. Why am I looking at it as one move? Because what I was looking for, I wanted to see an expansion, a respect, an expansion, then a retracement.
You want to keep those on?
Yeah, I want to keep those on too. So Man, I keep unmuting. Right? So, right, that's why I say I count it as one move, because I wanted to see an expansion, a respect, an expansion, then a retrace and go, right? I needed this for my confirmation, right? You don't need this, but for my trading style, this is what I wanted. And that's based off of my experience with these type of days, right? I be wanting this extra confirmation right there. Because if I would have got long based off of this order block right here, right, price would have gone up, and then I would have had to sit through this, then price go up, unless my target was just right there, right? If my target was just right there, then no harm, no foul. But if I wanted a higher target, like up somewhere, up here somewhere, right, if I wanted that as my target over here, that high over there, right, I would have had to sit through this pullback right here, right? So imagine getting long here, right, going away, coming almost back to break even, and then finally going up to your target way over here at the end of the day, the last 15 minutes of the day. Brutal, right? So yeah, that's pretty much it, man. That's pretty much it. It was a high resistance day. The New York morning time has been pretty garbage lately, right? If you don't know what garbage is, just, look it up. It's French. That's a French word, right? So the New York morning session, it's been pretty garbage lately. And then the afternoon was a little bit cleaner. Empire Traders, what's up, Empire Traders? I forgot to say what's up to Ramon. What's going on, Ramon? Wells J Rock, order block is protecting low. Yes, Wells J Rock, appreciate that. London low was 25% of yesterday's new day opening gap. Was it? Okay, I appreciate that. I didn't check that, but I appreciate that. Kashaya, I appreciate that. Great breakdown. I didn't trust the relative equal lows at first, but you just explained it. You say you didn't trust the relative equal lows at first, but you talk about these relative equal lows over here? These right here? What relative? You talk about these relative equal lows? Which relative equal lows you talking about? Or you talk about these over here? These relative equal lows?
Yeah, the ones you just circled just a second ago. Yeah,
those right there?
Yeah, because I know you said you like if you've seen those before, you're cautious about going long, but you just explained why you can kind of trust it, and you're waiting for an expansion higher first. So.
Yeah. It's if anytime you see something that you're leery of in price, just look for extra confirmation. Ain't nothing wrong with more confirmation, right? You can't never go wrong with more confirmation. Sometimes you might miss the move, you know what I'm saying? But there's nothing wrong with more. Like, if you jump in with not enough confirmation, that can go left real quick, right? But if you wait for more confirmation, sometimes it plays out beautifully. You know what I'm saying? It plays out beautifully, right? It took the retest today and went to the moon. Okay. Once it started breaking out of the consolidation, I'm all in. Okay. That's what's up, man. You play the breakouts, I see, Empire Tradings. Myself, I'm not a breakout trader. I look for certain signatures to participate. I have shifted my mind to the MEP. Who know what the MEP is? Who in the gang remember what the MEP is? What's the MEP? Who remember what the MEP is? Who remember what the MEP is? Gang, y'all remember what the MEP is?
I have no clue.
Somebody in the boot camp. We just went through this in the boot camp. What's the MEP? What's the MEP boot camp, people? Oh, I close.
A 90s R&B group? I don't know, man.
A 90s. Oh my goodness. I
Nah,
tell you.
that was MOP.
Yeah.
But I don't know either. I was about to say, but I had those dog too, man.
Oh my goodness. Oh my goodness. These people around here. Let me see if I can see which class it was in. Here we go. It's just starting to look familiar now. When you first get into the market, you know there's something going on behind the scenes, but you can't really put your finger on it. But as you start to learn
Is
the
that-
IC,
Is that market efficiency paradigm?
market efficiency paradigm. There you go. You want to think in the as smart money. So you want to think as the market efficiency paradigm shift. You want to have that because the market is structured to run efficiently for the smart money. Right? It's structured to run efficiently for the smart money. Everybody thinks the big hedge funds, the large institutions, the unmuted Yolandas, the everybody. They think everybody that's in this big circle over here is leading the market. But this little circle over here is what's leading the market. And the algorithm is coded to run efficiently for smart money. Right? The smart money is the liquidity provider. The algorithm provides the liquidity because it's offering a price for the hedge funds. It's offering a price for the investment bankers. It's offering a price for you and me, the retail traders. It's offering a price that anybody who called themselves a market maker, it's off your broker. It's offering a price to your broker, right? And we can only pay the price or purchase the price that the algorithm is offering, right? And the algorithm is coded to make the market run efficiently for the smart money. So if you want to take advantage of it, you want to be in this circle here. Because if you notice, this big circle is full of willing and unwilling liquidity, right? Who can tell me what willing and unwilling liquidity is? What is that? It's real simple. It's real simple. It's real simple, right? It's not a person. It's not an entity. It is a thing. Think about it. Willing and unwilling liquidity, right? Right, there's your clue right there. That's your clue right there. Willing and unwilling liquidity, right? What is that right there?
Is it anyone who participates in the market?
Not retail traders. No. It's something.
anyone-
It's something that anyone that participates in the market stops. There you go. There you go. Shout out Empire Trades. Shout out Kim. Stops. Willing and unwilling liquidity. Because if you got a protective stop, right? If you got a protective stop, guess what that is, right? You have just become unwilling liquidity, right? Because you really didn't want to get liquidated, right? If you got a entry stop, you have just become unwilling liquidity, right? Why? Because you are being forced into the market at a price that you think is good, but the algorithm really knows that you are unwilling liquidity, right? Or you can willingly put a stop in to get yourself out. Like, hey, I'm happy to get out right here, right? So any type of stop is willing and unwilling liquidity, right? So the algorithm is structured, coded for the efficiency of the smart money. Well, Tim, how can you say that? I can say that really easy, right? Who remembers that little thing that we talked about with institutional sponsorship, right? Now, we've talked about this for several days. If we remove the time distortion like we did, right? If we remove the time distortion like we did, we're going to take the time distortion out, cover this up really, really good, right? Remove the time distortion. Okay. Now, as price moves from here to here, can anybody see the clues of institutional sponsorship as we go along our way? Right? Somebody tell me one of the clues of institutional sponsorship that you see starting right here. We're going to start right here. Somebody tell me one of the clues of institutional sponsorship.
At the intermediary high and then retrace.
Say again. Starting over here. What'd you say?
I said took out the intermediary high and then retrace.
Took out an intermediate high and then retraced. You say took out an intermediate high and then retraced? That what you said?
Yeah.
No. I said from here this way. When we starting here, going that way.
What's that? Bullish water block?
Was what?
I said, is that a bullish order block where we start at?
At this point right here is just we just there. It's nothing. We don't care. Well, we just starting here. We just starting here and going that way. Do I need to? 80. Look at 80 right there.
Consolidations?
No, 80 got you. 80 got y'all right there. 80 said took out a liquidity pool. Right. We saw an aggressive move into the sell side. All right. Remember, you want to see that attack on liquidity. You want to see a move to discount or premium. You want to see some type of energetic move, right? You're looking for moves that the elephant has stepped into the pool. The water is moving, right? So we got this nice drop down into the liquidity pool, right? That's one clue. That's one piece of evidence that institutional sponsorship is in the market. Now, when we get this, what's another piece of evidence we want to see? If we see this attack, what do we want to see? What do we look for? Once we see the attack, what do we look for? Hmm? Buy side, no. No, Ron. Short-term high, right? Short-term high. We're looking for, in this case, buy side liquidity, short-term buy side liquidity in the market above where we just attacked. Gang. Boot camp members, y'all remember this morning when I said that I'm not convinced that price wants to go up unless we take out this high. Who remember me saying that this morning? Who remembers? Lump, you was in there. Yolanda, you was in there. Jim, you was in there. Y'all remember me saying that? When I said I'm not looking to sell down here, right? 80 said he remember. I said, if we come back here, we're coming into a premium just to sell. And I'm not convinced that we want to go up unless we take out that high right there. Right. Any of y'all remember that? Yolanda, Lump, Jim?
Yeah, I remember.
Okay. Now, this is why I said that. Yolanda said she remembered too. This is why I said that. The steps, stacks on stacks. We got a displacement into a low, right? If we get that attack on liquidity, we want to be looking for short-term buy side in the market, right? When we drop down here and failed to take out that high, what is that right there? Right? Somebody tell me what that is right there. We dropped here, then we failed to take out that high. What is that right there? Is
that a mitigation block?
No, just right there. When you're looking for a specific PDB, right?
Relative equal highs?
Relative equal highs, right? What is the algorithm doing when it creates relative equal highs or relative equal lows? What is it doing?
Engineering liquidity.
Engineering liquidity. So when we get an attack on sell side, we want to look for short-term buy side in the market, and we're better to look for short-term buy side at relative equal highs, especially at the point where we just took off from attacking that low, right? Short-term buy side in the market. That's why this morning I said I'm not convinced that price wants to go up unless we take out that high. Why? Because I'm looking for institutional evidence of institutional sponsorship, right? Now, when I said I want to see a move up here, come back and respect this, and then an opportunity to trade, right? Remember I said that. Now, what's another clue of institutional sponsorship, right? We're just going to say liquidity, right? Buy side liquidity. Let me see. Attack liquidity. That's a Q, right? Buy side liquidity. There you go, Wells J Rock. Displacement, right? Displacement. All of that is evidence of institutional sponsorship, right? So institutional sponsorship is giving you, and it's showing you that the algorithm is going to come to a predefined place, right? A predefined point that the algorithm only knows. We can just look for clues to participate in it. Okay. So if we get the attack on liquidity, right? We got the evidence of buy side liquidity above price, and then we get the displacement. Now we're just looking for the retracement and opportunity to partake of our pound of flesh. Okay. And remember, I said I wanted the move away, right? I wanted the move away, the respect, and then an opportunity to trade, right? And if you look now, this right here, right? I'm not saying that this is a signature or nothing like that. This isn't a signature, but if you look at what price did, right, when we first moved away, right, as we went up, the algorithm carefully made sure it overlapped every single candle going up and coming down. Carefully overlapped every single candle. When it made an imbalance here, it quickly went all the way down below the order. It quickly or efficiently delivered everything, right? But when it was ready to go, it left imbalances, and then we got a retracement down into the order block and got up out of there, right? Price traded a lot smoother here. Yes, it was a deep retracement, but that's because we're in high resistance conditions. It was a deep retracement, but it was a lot cleaner than this over here, right? It was a lot cleaner move, right? It was a up, down, up. Whereas here, it was up, down, up, down, up, down, up, down, down, up, down, up. It was very sloppy right there. All right. I appreciate that Mike trades daily. I don't trade with other folk though. I just trade by myself. I don't even trade with the gang. Me and the gang just read price. Cause I ain't trying to teach nobody how to trade. I don't run no call out service. I don't, you know what I'm saying? I just try to share with people how I see price action. Cause I believe if you teach a man or a woman how to fish, they can feed themselves forever. You hear me? I appreciate it though, Mike Trades Daily. I appreciate it though. I don't get out there on Al Gore's internet like that. You know what I'm saying? But I'm just here to share my thought process on price action, right? And I like to point out, I like to poke the bear sometime too, but I just like to point out to the gang, right? This stuff really works, right? I know they always tell me, Tim, it sounds so clear and it looks so clear when you're saying it. That's why I like on evenings like this, when it happened exactly like we talked about in the morning, right? I like to say, see, here it is. See, there's water. What prevents me from being baptized? That's right, Empire Trades. This stuff really works. And it's somebody on Al Gore's internet charging you $19.95 for this. You hear me? What you got, Jim? You ain't got nothing? I thought you heard something because you had unmuted. All right. That's all I got. Anybody got anything for me before I get out here at 7 o'clock? Y'all got anything before I get out of here? Nothing. All right then. Boot camp. I'll see y'all in the morning for the do you think you would do a stream tomorrow? At 6 for the price action recap. Boot camp. I'll see y'all in the morning at 9 for the tape reading session. I'll see y'all tomorrow night for the price action recap. And then boot camp, I'll see y'all. Tim, come hang out with me on live. Do it, man. We be dope. Invite your peeps. I come check you out, Mike Trades Daily. I come check you out. Y'all shout out Mike. Let's go see what Mike's Trade Daily YouTube channel look like. Let's go see what Mike Trade Daily YouTube channel look like. Mike Trade Daily, what's your YouTube channel? Is it Mike Trades Daily? Is it Mike's Trades Daily? What in the world is this here? Is that you right there, Mike? Hey, Mike, a handsome fella. What's going on, Mike? Is that you, Mike? Is this the right channel? All right. Subscribe. I'm gonna come check you out. When you be streaming, Mike? I do tape reading with the gang with the boot camp members at from 9 to 10. What time you be streaming? I'll pull up in your live stream and check you out. Yeah, I come check you out. And me, Mike, I don't care what people trade. I trade ICT concepts, but I just like to watch live streamers. I just like to watch trading stuff. I don't care what you trade. 7:30 just hit me in the comments, and I'll send you a link to join. We love the company. You're good. Now, I ain't going to get on. I'm going to stay behind the scenes, but I'm going to pull up. You start streaming at 7:30? Yeah, I'll pull up on you. I just pull up just to support your stream. Yeah, I already subscribed. Y'all go check out Mike, man. Y'all go check out Mike. Go subscribe to Mike. I don't know what Mike got on his channel, but since Mike over here showing love, y'all go subscribe to Mike, man. Go check Mike out. Hey, I'm about to get out of here. That's it, man. I appreciate y'all for hanging out with your boy. Again, if you got something out of this, share it with somebody who you think might get something out of it, man. My name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Remember, if the tag don't say marathon, that Crenshaw crew neck you got on is a knockoff. Hey, man, it's your boy Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just mean big spider if you don't hablo Espanol. Yo, y'all be safe out here in these trading streets, man. I'm gone.